I bet you have heard the news that Silicon Valley Bank has closed. Now Silvergate and Signature Bank have also been involved in this bank turmoil. Even the share of Credit Suisse plunged as well, and now it has to take up the Swiss Central Bank's offer of financial support and borrowing up to $54 billion. This prompted a general sell-off in European markets and fears of a wider financial crisis. Even banking stocks in Asia decreased. So is this the new Lehman moment? And how could we avoid another failure of a banking giant? Welcome to FactStyle. I'm Sina. Now here's 3 hacks I come up with to avoid a second SVB incident from happening. Hack number 1, don't buy too many US government bonds.
Which is a bank, and you could substitute the word hedge fund or anything else, made a very specific bet, and their bet was they invested a lot in investments that would do very poorly if yields went up.
Alright, the reason underneath is the bonds have an inverse relationship with interest rates. Rates rise, bond prices fall. So when the Fed increased rates rapidly to combat inflation, SVB's investment lost hard. And when interest rise, it is also harder to borrow money as well. So tech companies, particularly affected, started to draw money from SVB. So although unlike other banks, SVB enjoyed a pandemic-induced boom with its deposits increasing from $62 billion to around $200 billion in the past 3 days, buying too much government bonds made it short of cash. That's why it had to sell those bonds at deep losses. And once it announced the news, hey, my investment lost a lot, that spooked customers and investors to draw more money. That's what we call the run on the bank. So just like a really bad vicious cycle. The bank lost money, people started drawing cash. The bank lost more money, and more people started drawing cash. And it took just 48 hours between its announcement and the collapse. Now, hack number 2, people need to do their job. Before anything bad happens, there should be at least some signs. And while the Fed raises the interest rates, banks normally need to do their stress testing. But the thing is, stress testing itself is failing. Since SVB has been classified as systematically unimportant during the Trump era, it was not subject to much scrutiny. However, it is believed that stress testing should be the focus of the Biden administration's review of federal bank regulation. And you know what's even more suspicious about this whole thing? Not everyone lost money. Some people made more. Now, according to a New York Times article, the CEO of SVB, Gregory Becker, made a super positive speech earlier in March in San Francisco's luxurious Palace Hotel, where he told all the investors, analysts, and executives that the future of the tech industry was sparkling, and so was Silicon Valley's bank's place within it. So this man cheated. He didn't say that the rating agency Moody's earlier had caught him, saying his bank's financial health was in jeopardy and its bonds were in danger of being downgraded to junk. According to the article, Mr. Becker had been scrambling since then to fix things. Yet one day after its CEO projected confidence, SVB announced a $1.8 billion loss and hastily put together a plan to raise more than $2 billion in fresh capital.
Well, that's what's extraordinary, Joe. When you look at heads of financial institutions right now, many of them have just never had to play in an inflationary environment like that. Now, you could say, well, there's no excuse for that. What are you running a major bank for? What are you running the 16th largest bank out there for and not realizing, oh, hey, rates could be going up? Yes, that seems obvious. But listen, they made a very bad mistake. Fast forward, they decide to come out, sell securities, spook the markets, and it's sort of a confluence of bad events and bad decisions that caused disaster for Silicon Valley Bank. But you said it. Very few people have had to work, have had to run organizations in this type of inflationary environment. And man, they got caught on the wrong side of the trade.
True, there is no excuse. And there's something that the New York Times article didn't say as well. Mr. Becker smartly sold $3.6 million in stock 2 weeks ago before SVB's epic crash. This tells us what? He knew everything, so he cashed out. Seriously, if Becker believed so much that the future of the tech industry in SVB is so sparkling, why should he sell the stock? He should buy more. This guy should start in Wolf of Wall Street too. Now, hack number 3, don't start conflicts in other countries. In the first place, I'm sure the Fed didn't want to raise this much interest, and they probably knew it was too fast and dangerous. But they didn't have a choice. You see, inflation over the past year has skyrocketed. But why is the inflation so high? Well, you can check out our previous episode. Basically, apart from the Fed's long-term extremely loose monetary policy and Biden's stimulus plan, Russia-Ukraine crisis is crucial. The conflict caused sharp increases in commodity prices because both countries are major global resource exporters of crude oil, natural gas, minerals, and food. So seriously, the key for the Fed not to drastically increase interest rates is to prevent high inflation. And to do that, don't start fan flames between NATO and Russia, and don't start a conflict and fund it. The US sent over $75 billion to Ukraine. Where did all this money come from? And this is the key moment and a crucial juncture of the US banking system, including big banks, small to mid-sized and regional ones. They also impact small business owners across the country.
It's very similar with a company. These companies have large deposits, often only with Silicon Valley Bank. They haven't diversified their deposits across a range of different banks, and they're not going to be able to access money from Monday. Now, that is going to cause problems for a large range of firms to pay salaries, to pay subscriptions, to keep their businesses going. And so whilst there is some deposit protection for these companies that have invested with SVB, that is actually quite limited, and most of the deposits, I believe it's 97%, go beyond the guarantee of the Federal Deposit Insurance Corporation.
As America's second biggest banking failure, the downfall of SVB has influenced a long list of startups as far away as China. Now, I don't know whether this is just a banking crisis in America or a Lehman moment that will trigger a financial crisis. All I know is the decisions the US government is making right now is crucial to so many people. The ones with families, the ones having mortgages, and the ones providing jobs to others. I mean, when I say spending a whole lot of effort on blocking the independent investigation at the UN on Nord Stream sabotage, letting mainstream media cover the Chinese spy balloon instead of the Ohio derailment, and not caring about paying attention to review its federal bank regulation, none of that makes sense to me. Shooting down a research object and some $12 hobby balloons couldn't save America's banking system, and constantly cooking up stories on China won't help the Biden administration curb inflation and develop its economy. So stop paying attention to the wrong areas, unless it's all on purpose. Alright, that's it for today. Remember to click like and subscribe. I'm Sina. Until next time.